Hello, everybody. Thank you for listening to another episode of Banking on Experience. Today, we are going to be talking about some very interesting topics and some very interesting things with Mr. Cashflow from Cashflow Strategies. So stay tuned. It's going to be a really good one. You've never heard anything like this before, I assure you, on this episode, on this podcast. Thank you for joining us. To all the listeners out there, if you haven't yet subscribed to the podcast, please do so. We'd love to hear from you also. Reach out to us via LinkedIn or any other platform. Love to hear topics that you'd like to hear about on the podcast. But today, we are joined by David Wiener, Mr. Cashflow. Welcome to the podcast, David.
Thanks, James. Great to be here. I'm
excited. I mean, it's not very often you get to talk to somebody who actually has like a legit, really cool nickname. Can we actually talk to the listeners and can you tell them how this nickname came to be?
It's kind of a long involved story, but back in the 80s, 1980 through 1989, I ran a medical practice, left there to become a consultant to medical and dental practices primarily. Fast forward all these years, about 2013, my clients started complaining to me that they were working as hard as they could work, but they just weren't making any money anymore. And so asked me to figure out what to do to solve their problem. When I looked into it a little bit, I realized their problem wasn't revenue. Their revenue was fine. It was cash flow. And so I started to focus my consulting practice and my teaching and speaking on cash flow issues, which everybody has. And we're able to make some real significant changes in my clients. I expanded then to other small, medium-sized businesses. I have a few large businesses that I work with, but focusing on cash flow. And there's a large medical practice. I'm in the Atlanta area. There's a large medical practice here that has been a client of mine for 13, 14 years. And I was going into their office to train all of their front desk people from about 15 different offices on how to talk to patients about money. And when I walked in, the CEO of the practice was standing in the lobby, and just kind of over his shoulder, he and I were friends and members of different organizations together and things, but just offhandedly over his shoulder, he said, "Hey, there's Mr. Cashflow." And I stopped and I said, "Can I use that?" And he said, "Oh, I don't know, do I get a commission?" I said, "No, but can I use it?" He said, "Yeah, I don't care if you use it." I wound up branding it. I have a blog called Mr. Cashflow's Tips and Tricks, now a YouTube channel. I do a weekly broadcast, Mr. Cashflow Live, and I speak all over the country to all different kinds of groups and associations, companies, that sort of thing. And more people, I mean, when you have the last name Wiener, you want to have something else you go by, you know? And so Mr. Cashflow, people seem to remember that even more than they remember Wiener. So that's fine with me as long as they remember me.
Love it. I'm going to ask you a quick question. Just to kind of break the ice a little bit with the audience, make you feel a little bit more human. Who is your hero?
My hero is my dad. Without a doubt. My dad was a larger than life type person. He knew everybody in the town I grew up in. Could have run for mayor and won easily. He was a CPA, worked with medical practices. That's how I got so familiar with medical and dental practice management. And he was a reserve police officer, which led to me becoming a police chaplain for 20 years, wow. Both in Ohio and down here in Georgia. And I have a big heart for law enforcement and fire and all the first responders, and still work with them some and do some things with them. But yeah, my dad was my hero, larger than life.
Love it. Well, David, let's get going on this episode. So for the listeners, we're going to be talking about tapping into the potential of charge-off accounts. That's going to be one area that we're going to be focused on, but there's going to be some other ones that we're going to touch on. Let's start by first of all, how did you get so passionate about this cash flow strategy? I know that you've given us this story, but talk to us about like why cash flow, and how has it grown, and specifically how does it impact FIs?
Well, it obviously didn't start with FIs. It started with medical and dental practices. And after having worked in the industry for 9 years as a practice administrator, I had a heart for these doctors. I used to take it very personally when people would say, they don't need my money. They're rich. They haven't got a clue. And so when I started focusing on cash flow with them, I realized, number one, how little people think about cash flow. They think about how much money's coming in the door, what's my profit. And you can be very profitable in a business and still go out of business because you have no cash flow. You can't pay your employees, you can't pay your taxes, whatever. It's profit's important, revenue's important, cash flow is crucial. And I saw so many businesses and so many medical and dental practices that were really struggling just because they didn't know how to manage their cash flow and they didn't know how to optimize it. I started out basically just referring them to people that I knew. I know a lot of people who do a lot of things, and I started referring them out to people who do all the different things that can help them with their cash flow. If you anybody who's ever worked with medical and dental practices know that doctors are wonderful people. They're just not the world's greatest business people, and so they never got in contact with half of the people I referred them to. And the next time I met with them, they were telling me again what they were having problems with and all this kind of stuff. So after taking about 2 years to vet the best of the best companies that did all those things that I was referring them for, I wound up signing independent contractor agreements with about 8 or 9 companies so that I could be a one-stop shop for them, walk them through everything they needed, get them set up, help them do all those things. My consultations are 100% free. They don't pay me for the consultations. I can go into a business or a practice and in about a half an hour show them a bunch of ways that they can improve their cash flow. As I started doing that, the first company that I signed on with was a company that was called Transworld Systems. Now it's known as TSI. They invented fixed fee collections. So rather than paying a collection agency 25, 30, 40, 50% of whatever they collect, they charge a fixed fee that averages less than $15 no matter what the balance is. So that caught my attention right away. And as I got involved in it, I talked to a few people with Transworld Systems that were very, very involved in the banking and credit union industry, working with all these financial institutions. What intrigued, and we work with them in a number of different ways. We collect on loans. We collect on non-charged off demand accounts and checking accounts. We also, what caught my attention was charged off accounts, we can recover their fee income. What happens is most financial institutions, banks, credit unions, they don't have the staff to follow up on all of these charged off accounts, just because some of them are low balance and you know, so and it's very expensive to do it from in-house, making the phone calls and sending out, you know, annoying letters and all those things that they do. So I'm looking at this saying, wait a minute, we can do all of that for them for less than $15 per account. Why would they even try to collect it in-house? If they don't collect it, then we can move into a more aggressive collections type phase that is based on a percentage of what's collected. But what I found is, and I have a stack of reports and a stack of letters in my hand from banks and credit unions in all 50 states all across the country saying, we stopped following up on our charged off accounts or on our you know, our fee income. We just turn it over to TSI for almost nothing. They do it for us, and the recovery rate is incredible on it before it ever has to go. And in this fixed fee phase with Transworld Systems, the client is paying the money directly back to the bank or the credit union. It doesn't go through a third party and wind up getting to them later minus a percentage and all that kind of stuff. We do the contacts for them. We can actually do contacts in their name if they want. We can do it as a collection agency, which is really kind of the most effective. And then for the really hard cases, we can do the full collections and that sort of thing. So I saw the potential impact of that, and that just, when I get on a bunny trail, I kind of try and take it to the limit. So, and I know some people that's what they do 100% of the time, full time with Transworld Systems, is they work with banks and credit unions. In fact, we are in the middle of, right now, I checked to see if it was completed. We are in beta testing now with a full interface with Jack Henry software. So not only do we do all the collections and stuff, we can pull the demographics, the name, address, phone number, all that stuff directly out of the Jack Henry software, and they don't have to type anything in. They just have to say, yes, we want this one to go, or no, we don't want this one to go, or yes, we want this one to go. And for a very little bit of money, they can collect a ton of fee income that would have just been written off and forgotten. To me, that's amazing. I mean, for a guy whose love is cash flow, that's cash flow.
Well, you know what's interesting is we saw credit unions, especially, and banks over the last year, do a lot for their members and customers. And I think one of the things that we're going to see is some of that, as helpful as it was to people and the economy, I think that some of that, there's just going to be a lot of folks that can't recover. I think that's going to be a very real reality this year. And I think that some of that is going to be there's going to be, I think, an increase in charge-off accounts because of that. I think there's going to be more people that are going to have to file for bankruptcy and do some of those things that are just
You would be very surprised, James, when I tell you that during the COVID epidemic, and especially with me dealing with medical and dental practices who had to close, a lot of them, or were only doing emergency stuff, and a lot of them said, we don't really want to send anybody to a collection agency right now because that would be really mean.
Yeah.
When we talked about it, and I do a regular YouTube channel, and I do a lot of videos on this kind of thing, and people have money. They really do. And our collections percentages were way up during COVID. Now, whether that's stimulus money that's coming out, or whether that's nobody's traveling, nobody's eating out as much as they used to, most people are working from home, so they're not spending the gas and stuff. They actually do have money. It's just a matter of making sure it's allocated to the right places. And I have all kinds of documentation to show that my clients, medical, dental, and otherwise, that actually continued collections through COVID, their collections are way up.
That's very interesting. I would have actually thought that it would have been the opposite. I
would have too.
That's so interesting. Well, let's do this. I would love for you to talk about, what are the first couple of steps that financial institutions could do to maybe start making this part of their growth strategy, because it's obviously untapped revenue for them, and it's something that they could definitely be doing today. So what's step one?
I think they need to look at what are they charging off accounts wise? What are they writing off as far as fee income on those charged off accounts that they're not getting? Kind of come up with an idea of how many accounts it is that they're charging off on a monthly basis, what the total dollar amount is, and then they might want to look a little bit at what are they spending to try and recover those. Because that's going to give them the real picture for what it's costing them for the amount that they're bringing back in. I'll give you a prime example. I'm holding a letter from a bank, a national bank, said they've been with Transworld Systems for 6 years. Transworld has recovered over $105,000 of overdrawn, charged off fees for an average of $10 an account. You can't do that in-house. You can't possibly do that. I'm looking at some reports. Here's one. They spent $33,708 with Transworld Systems, and we recovered $396,718. That's a collection percentage or a collection cost at about 7.5%. And the stories are, I tried to pull large cities, small towns. Here's one that spent 37,650 with us. We collected $987,000 for them.
Wow.
Here's one that spent less than $4,000 with us. We collected over $222,000. The fixed fee concept is something that most aren't aware of. They're not familiar with. You know, if you charge off and write off $100 account, they're probably not going to invest any staff time in trying to recover that.
Yeah, no doubt.
But if they pay $10 and get to keep all of it when we recover it, that's worth doing. And for that, we make 5 contacts with the client as a collection agency. And then we can talk about further collections after that. But this also works. Oh, here's one. I pulled this. This is from New York. This is a bank, a national bank, using us for charged off accounts. They've spent $5,661.49 with us. Nothing. We've recovered $2,921,820.13, a collection cost of 0.2%. Tell me that isn't workable, you know? And so look at what you're actually spending and what you're actually getting now. Then they need to give me a call. I'll run some calculations on it and show them what's possible and what it would cost. It's not expensive. And again, my consultations are all free. So, you know, we could talk about how are you collecting on loans that go past due. Fixed fee is a great way to collect on loans. How do you collect on pre-charged off accounts? How do you collect on charged off accounts? All of which we can help with our DDA Plus service that we do. And if it looks good to them, that's great. And I can walk them through getting started with Transworld Systems or TSI. If it doesn't look good to them, we remain friends, and you know they can subscribe to my YouTube channel and learn all kinds of other ways to improve their cash flow.
One of the things that we had talked about when we had met prior to us recording was cost segregation. Talk to the listeners about that.
Well, that's a complete 180. Cost segregation, another thing that I started doing because a lot of my clients needed it. If somebody buys or builds commercial property or rental residential property, typically the way that that's depreciated is straight line. In the case of commercial, it's over 39 years. In the case of rental residential, it's over 27 and a half years. So you buy a $39 million commercial building, you get $1 million off of your taxes as a deduction every year for depreciation. But the IRS says you don't have to do it that way. By doing a cost segregation study, and I highly recommend an engineering-based cost segregation study because that is the most accurate. It is what the IRS calls the certain method of depreciation. We come in, we do a full study of that building, and we break it into all of its pieces and parts. Kind of the best way to think about it, and I'm dating myself, is you can look at a Big Mac as a hamburger. Or you can look at a Big Mac as 2 all-beef patties, special sauce, lettuce, cheese, pickles, onions on a sesame seed bun. If you remember, you're too young to remember that commercial, I think.
No, I'm not too young.
So what we do basically is we take that building and we break it into all of its pieces and parts. A lot of those pieces and parts, in fact, all the non-structural parts, can be depreciated at 5, 7, or 15 years. Right now, through the end of 2022, all of that short life property can be taken 100% the first year. So you're looking at like 40% of your building depreciated all of a sudden at once, which gives you a huge tax deduction, which saves you all kinds of money. So same thing works with rental residential property or leasehold improvements. If they're over say $200,000 worth of leasehold improvements. We can do a cost segregation study on that. The study's relatively inexpensive. I mean, based on the ROI that you get, it's very inexpensive. But I think I told you the one case that I love to share with people. We have a guy here in the Atlanta area who built a warehouse to store furniture for his 5 or 6 furniture stores. I got a call from his CPA, and I work with a ton of CPAs on this because they can't do the calculations. Some of them take a good swing at it, but they can't. And he said, it's just a warehouse. I don't know how much non-structural there is, but can we at least try? Well, I can run a free estimate on any building that'll show the cost as well as the potential tax benefit. We ran the study. I went over with the CPA and he said, yes, do it. By the time we were finished, the study cost this guy $15,000 and we got him $2.3 million worth of additional deductions for that year. Not a bad return on investment. And, he's not going to pay any tax that year and probably will not pay any tax for a few years. So that there's cash flow for you too.
You know what I think is so interesting about both of these topics, and I know that they're very different, right? But what I find so interesting about this is, the FIs out there really want to try and be seen as financial advisors to consumers.
Absolutely.
And they have consumers like that don't own a business, but they also have a lot of consumers that do own a business. And I don't think a lot of financial institutions think that, hey, there are things out there like what you're doing that are true, like you put it, cash flow strategies, right? That are real and tangible, and they can start educating and even use the likes of like a consulting firm like you to help those small businesses.
I work with a lot of commercial lenders around the country. And whenever they get somebody who's looking to take a loan on commercial property, they say, hey, would it help you if you could save 40% of the building cost in taxes? And if the guy says yes, he says, then you need to meet David. I'll introduce you, and I can pay a referral fee. Most won't take it, which is fine, However, how do you look in a potential customer's eyes when you show them a way to save all of that money? Plus, I tell people who are looking to buy buildings, get the free estimate from me, and when you go to apply for a loan, take that estimate. You don't have to own the property for me to do an estimate on it. Take that to your lender and say, look, here's what we're going to do. I'm going to save this much off my taxes. How much more credit worthy am I now? And that seems to work really well. In fact, I have a bunch of videos for real estate investors that these are the kinds of things that they need to be doing. But some of my favorite referral partners are commercial lenders and real estate people.
Yeah, I love it. I mean, I don't think that any of us can know enough about how to have better cash flow, even as individuals, too. So it's something that we have to constantly be educated on. And I think that, you've got some really, really great material. David, we are at time. I would love for the audience to know. Yeah, it does, right? I'd love for the audience to know how they can reach you as well. So I know that you've got a YouTube channel and you do your own podcast as well. But outside of that, where can they reach Mr. Cashflow? They
can reach me by email at david.wiener, and it's WIENER, at cashflowstrategies.us. And they can reach me by phone at 888-780-1333. And little secret, don't tell anybody, it rings to both my office and my cell. So you're going to get me. And I am obsessive compulsive about returning phone calls. If you'd like to get a free estimate on a building, great. I'll be happy to do it. I only need about 4 or 5 pieces of information. If you'd like to look into collecting on pre-charge off accounts, charged off accounts, more information, that kind of stuff, I'm here and willing to talk with you. Call me anytime.
David, thank you so much for joining the show today. We appreciate it.
My pleasure. It was a lot of fun. Thanks, James.